5 year-end smart moves that could save you thousands. It's not just about rates, it's about taxes. Some smart moves before December 31st could save you thousands when you file next April. Both investors and homeowners benefit from tactical year-end real estate strategies that positively impact bottom line. First, let's look at mortgage interest deductions. Accelerating deductible interest payments before year-end can create a tax benefit in the current year if you itemize and haven't already exceeded the deductibility limits. In a high-income household with variable earnings, such as self-employed business owners or commission-based sales professionals or simply end-of-year bonus recipients, shifting deductible interest into a high-income year may lower taxable income. This move matters more for buyers who closed mid-year on larger loans, such as in Alpharetta, Milton, and Buckhead, where interest amounts frequently approach deductibility ceilings. What you need to do is review your current gross income and the projected tax bracket. If your 2025 income has dipped, it may be smarter to retain these deductions for the following year. Let's look at property tax prepayment. Georgia property taxes are deductible at the state and the federal level, subject to SALT, the SALT cap. What is the SALT cap? It is a cap of $10,000 on the amount of state and local property taxes that can be deducted from federal taxable income. Prepaying can be beneficial when you expect to owe more taxes next year due to income changes. The people that benefit the most are the high-value homeowners in Roswell, Johns Creek, and Sandy Springs with property taxes that fluctuate after reassessment. This kind of timing strategy may help reduce your overall tax exposure. However, if the SALT cap is already maxed out, this maneuver yields no marginal benefit. Capital improvements and increasing cost basis. Number 3, major improvements to a personal residence, a rental home, or short-term rentals should be logged meticulously because they increase your cost basis. A higher basis reduces your taxable gain on a future sale of that property. Examples that count as capital expenditures are kitchen or bath remodeling, roof replacements, outdoor living enhancements, and energy efficiency upgrades. Given North Atlanta's appreciation trends, sophisticated owners planning to sell within 3 to 5 years can save substantial dollars by documenting capital expense now rather than later. A fourth recommendation is refinancing and deductibility timing. Look at these. Refinancing restructures debt. Some interest tied to cash out refinances may no longer be deductible if the proceeds are not used to improve the property. Did you refinance to improve your home? Have you done that yet? If waiting to deduct the interest on that loan, make sure to get those updates done before year end or sooner. If you're thinking about refinancing, it may be better to maintain the higher deductible interest in Q4 if you itemize. And for adjustable rate loan holders who are considering refinancing soon because of rate adjustment, look to see whether the refinance costs outweigh lost deductions of your present loan. Align the refinance decision with your tax picture, not only rate shopping. Number 5, my investor-focused strategies. Investors have additional high-value moves that can transform year-end results. Accelerated depreciation pulls allowable depreciation forward and can reduce taxable income this year. Reclassify equipment for shorter lifespans. increasing early year deductions. This applies particularly to short-term rentals in high-demand tourist corridors like Lake Lanier or Blue Ridge and their cabins, owned by, of course, Atlanta investors. Then there is the 1031-like kind exchange, allowing you to defer capital gains by rolling proceeds into another investment property. If you are a high-income professional with short-term rentals, you may unlock passive loss deductions if you meet material participation test. If you materially participate in your short-term rental, your losses are not passive. That distinction matters because passive losses can offset passive income, while non-passive losses can directly reduce your W-2 business or investment income. Go to my website to learn more about how to qualify for non-passive deductions on those short-term rentals. I'm offering these competitive advantages to enhance your cash flow and create tax-efficient growth vital to an environment of elevated interest rates and shifting rental demand. Here is my bottom line for North Atlanta decision makers. These strategies are not generic tax hacks. They are precision tools designed for homeowners with equity and investors with growth goals. The key is to align timing documentation and financing choices with income expectations and upcoming property moves. A mortgage professional with strong tax literate insight paired with a qualified CPA can help determine which deductions still have room under the federal caps, whether a refinance increases cash flow without killing tax benefits, and how to structure renovations and investment acquisitions to minimize tax exposure upon sale. Forward thinkers in this fourth quarter will outperform those who wait until April to sort it out. Always coordinate with a CPA or a tax advisor. Real estate math is powerful with tax strategy. Georgia allows certain deductions and credits. Many North Atlanta homeowners underutilize them. Let's make sure you are not one of them. Real estate is as much a tax tool as an asset. Let's run your year-end tax levers before December closes. Call me or let's meet. This is Sherry Von Klitzing, mortgage loan originator and realtor. Thanks for watching.